morning. Welcome to another Money Matters Live, where we go live every morning at 7 a.m. only here, only on onedealaway.com/live. Boy, do we have all kinds of cool information that we're going to cover today. Anywhere from what's going on with Venezuela. We've talked a little bit about their gold and, are they going to get it, not get it? We are going to discuss and talk about what's going on in real estate market and how you can benefit from it. We're going to be actually learning some of the stuff, and then we're going to be covering of what's going on in the world of crypto and what can we expect? What are some of the things that have been developing? So as you can see, we have an amazing, amazing, amazing episode today. And I welcome you. I am super excited to share this with you. So let's do this now. All right. So, good morning and welcome to a brand new episode of Money Matters. My name is Nev with One Deal Away, and you can watch us live every morning at 7 a.m. on onedealaway.com/live. You get to see all the news, all the cool things that are happening around the world from different markets and different perspectives. And if you join us live, then we get to interact, hang out, answer some of the questions, and so on. And so if you're watching it anywhere else but on onedealaway.com, you missed the live show. And so I invite you to join me tomorrow. Okay, now it's time to go over and cover what's been going on around the world. As you know, we've covered a little bit that Venezuela has been struggling to get some of their gold out of UK. And, this is not the first time that UK has been sort of blocking governments to actually take their own gold out of the storage. So let's find out what actually happened. Venezuela has reached a deal with the United Nations to use its gold frozen by the Bank of England to fund necessary food and medical purchases. The news comes 2 weeks after Central Bank of Venezuela launched legal action against the Bank of England demanding the release of more than $1 billion worth in gold. The UK has refused to hand over Venezuela's gold as the British government does not recognize the government of President Nicolas Maduro, basically saying, you were not elected democratically, so forget you, man. We're not sending your gold. However, according to the agreement, the funds from the gold sale will be directly transferred to United Nations Development Program to ensure it is not used for other purposes. However, it did not reveal how much gold the Bank of England is going to sell. This is one of those that is interesting and weird things. You have a sovereign country that has its own assets, but then you have a different country deciding whether they can have their money, how they can use it, what they can do with it. And this is silly. This is absolutely silly. And it reminds me of sort of what happens with our money when we have it within the banks and stuff. They get to decide, can you withdraw it? Can you not? Can you spend it for this? Can you not? So it's really interesting the amount of censorship that is happening, not just in social media, not just, in the political world, but financial world as well. And so, this is a perfect thing to talk about in this particular episode, because we're talking about sort of, becoming a sovereign individual, becoming a holder and controller of your assets, whether that is money or physical assets that have a potential to make money. And, really, how do you protect yourself in this world? And this is where some of the things that we're going to be talking about, like the cryptocurrencies, investing in real estate, that kind of stuff, give you a little bit more flexibility when it comes to it, because, you get locked into these bank deals, into the IRA and retirement funds, and then, you get penalized to take your own money. But I'm thinking to myself, it's my money. Like, I get to do what I want with it. But clearly, that is not what the big brother or big sister, or however you want to call it, works. So let's continue. The Bank of England is the second largest gold storage facility in the world after New York Federal Reserve. The bank has nearly $250 billion stockpile comprised of many nations' assets, including Venezuela's. However, since 2018, the Bank of England has repeatedly delayed the country's request to repatriate the gold. In January, the British Central Bank, let's try that again, blocked Caracas from withdrawing 1.2 billion worth in gold. This is one of those things that is just, it makes sense for them to have it, but it's one of those things that is just risky, and that's why we're seeing a lot of governments basically repatriating their gold and saying, you know what, thanks for holding it for us, but now we're actually going to hold it in our own vaults, because when they have it in their own vaults, then they can send it and spend it and sell it and do whatever they want with it as they decide as their government. And we may not necessarily always agree how a government is elected around the world, but at the same time, I think that there's all these countries that are trying to play world police, and there's plenty of places saying, you know what, we don't want that, we're not interested in that stuff. So we're definitely seeing this very strong divide between east and west, north and south. We're seeing it over in Europe, we're seeing it between US and China and Iran, we're seeing it now with the UK and Venezuela. So there's all these different tensions that are happening that are just really weird, and to be honest, they're a little bit petrifying, but that's just kind of where we are. And I think it's important to pay attention to some of these geopolitical moves, because, they impact and influence what we should be investing in and how we should be thinking about our money and investing. Now, one of the things that you likely have heard of is that we are reopening, and the markets are, super high on the reopening news, thinking that everything is going to be hunky dory because the things have reopened or they're in a process of reopening around the world. However, I think I've already shared some of the stuff and told you that TomTom is sort of this place where you can search for yourself the information and data of how are people behaving, are they actually traveling, what's going on. So I decided to share with you what I have found. So I took New York City. Now, New York City is one of the more congested, probably not as congested as LA, but more congested places in the United States when it comes to traffic. And so I wanted to kind of take a look at it, what's been going on. So here we go. This is sort of where we are at 7:07 local time, of course, because we're broadcasting live on onedealaway.com/live, uh, directly from Providence, Rhode Island. And we happen to be in the same time zone with New York City because we're only a couple hours away. So here's kind of what's been going on. We can take a look at this congestion level. Now you will see that the red one is the live congestion. The little broken red line is the previous weeks, and then the blue line is the average in 2019, so about a year ago. And look how far ahead. Now, I understand it's 6 o'clock in the morning. You're like, I don't know how I feel about that. But let's take a look at last 7 days. Look at this. You will see, and if I use my little thing, it shows you, where we are. But you can take a look at this chart, and you will see where the blue line is and how much higher it is than the red line. Red line is kind of like flat. And look at the weekends. I mean, they are dead, including, well, the Monday. This Monday was a holiday, so that's why. But you will see it even at the highest peak. It looks like Fridays are the highest peaks, and it actually says that when you scroll over here, it will actually tell you best time to avoid is Friday between 5 and 6 p.m. because it gives you this sort of heat map of what's going on and when it makes sense. And of course, you will see that 5 o'clock in the afternoon is super congested. And then, of course, Thursday and then followed by Friday, which makes perfect sense because, people are going away for the weekend and stuff. So, but you will see it even here that it's not much happening. And we're seeing this happening around Europe, around Asia, all over the place. So people are not going out and doing as many things as you think that they would. So this whole going back to normal, we're going to go back to the new normal, y'all. But not like what we used to experience a year ago or 6 months ago or any of that stuff. So that's just kind of how I see it. And so I don't know that the markets are quite priced in it. But then again, what the heck do I know? Markets have been going up, even though we're getting all these reports of people being unemployed, companies shutting down, economies struggling and reporting to be anywhere between 10 to 30% down in earnings and all of that stuff. So it's really, really bizarro time, but there we are. Now we're going to switch to, real estate. As you know, I absolutely believe in investing in real estate, and it is one of my favorite asset classes to invest in for a long term. Real estate is not something that you can quickly buy and sell. It's not something that you trade. I mean, there are some methodologies and derivatives that you can do that with, but overall, that's not what I'm talking about here. And so I want to point out that what we're going to cover here is not an investment advice. You need to do your own research, your own education. We are just covering this for your own sort of learning and growing and development. So let's jump over to Reality Track. And, they are talking about, 5 ways to invest in real estate in 2020. And, they're saying it's one of the best ways to invest. And I absolutely agree. There's going to be some stuff here in this very short article that I agree with and disagree with. So the first one that they're listing is fix and flip. So you find something that might needs a little bit of work, you buy it, typically discounted, you go in, you fix it up, and then you try to flip it. This has a potential to work really well in the up market when there's a lot of demand, maybe not as much supply, and you're able to actually take whatever little bit of equity plus the money that you spend and be able to flip it. Now, that's the traditional way. There's the not so traditional way where you can actually go in and buy deeply discounted properties like foreclosures, which are, coming. They're already here, and we're going to see that in a moment. And then, of course, tax sales, amazing, 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 and insanely profitable way to do that stuff. And the cool piece is, with some of these things, you don't even have to do much of fixing in order to flip it. And if you're interested in how to do that, I invite you to check it out by joining onedealaway.com and check out the academy where we actually teach you those things. So there you go, shameless plug. Rental properties. Now, rental properties is when you go in, you buy something, you rent it long term, typically meaning you rent it for on annual basis. You can go month to month if you wanted to, and you every month you collect income. Part of that income goes in towards fixing and improving the property. Part of that income goes to service the debt, taxes, insurance, that kind of stuff, and then part of that income should be going into the reserves and, of course, ability to then acquire more properties or potentially start getting paid and start getting additional sources of income. Personally, this is one of my favorite ways to actually invest in real estate because I do like steady cash. And there's as much as people are saying, this can be very challenging. There's many ways that you can do this stuff without doing much of work by hiring a property management company. And one of the things that you want to pay attention when you do this stuff is to make sure that the property management company is aligned with you and what you're looking to do. The third part that they're talking about is REITs, real estate stocks, ETFs, and mutual funds. This is not something that I recommend. I don't believe in it. Yes, you can invest in it. This is one of those places where it's actually liquid. You can trade it, you can buy it, sell it, but you lose a lot on fees. And you're relying on a third party to do the right thing. And why would you want to do that? That's my question. Part of this particular episode and things that I am talking about and teaching is that you want to have you want to become a sovereign individual. That means that you hold and control your assets. When you do REITs, when you do stocks, ETFs, mutual funds, you pay a lot in fees, so you lose a lot of profitability, and you give control and your money to a third party, just like Venezuela when they gave gold to Bank of England. Bank of England now gets the control. Like, yes, you can have it. No, you can't have it. These companies, because they become custodians of your money, can do the same thing, y'all. Can do the exact same thing. So why would you want to do that? That's quite silly, but I also understand that some people are saying, you know what, this is too much work. Well, there are different ways to participate, and one of that is syndication. And it's not exactly the same as you holding it, but at least you're aligned with small group of professionals. It's private. It's out of the bank. You have very strict agreements and rules and regulations and understanding, and you can accomplish way more, way higher profitability, and take way less risk. That's just my personal opinion. But of course, like I said, this is not financial advice in any way, shape, or form, and you need to make your own decision. crowdfunded real estate deals. This is one of those things that's like Fundrise and CrowdStreet and that kind of stuff. And it kind of breaks it down. It's similar to syndication to a degree, but in syndications, typically, not always, but typically, you are part owner. In these crowdfunded deals, typically you're going to be part lender, so you get to participate on the debt side, where you get paid X percent guaranteed, which can be quite lovely. But if you do full blown syndication, which can be challenging for some folks, that's in my opinion better because you can then not just benefit as depending how they structure it. It can be partially debt and partially equity, or just full blown equity, or just full blown debt. Personally, I like the whole equity component because if the uh, building or if the property performs really well, say that I'm a syndicator, which I am, but let's say that you decide to invest with some of my deals. The way we structure it is that you actually end up putting in part of the money. We put part of the money. We both have skin in the game. We go in, we buy things, we operate, and then we end up splitting the profits. Typically, it's not 50-50 because we end up doing a lot of work. So we got to pay folks for actually operating and managing the property. So that has an expense that gets taken off. But whatever the profit from that is, ends up being divided amongst people. So if it's just two of us, whatever is left after that, we share 50-50. So, if the profitability is, amazing, then cool. We all get to share in it. And the nice part of doing it this way is because it allows you and helps you when it comes to the tax time. Because as you know, real estate ownership allows you to legally reduce your tax bracket. Again, not financial advice. Make sure you check with your accountant before you do anything and your financial advisors. And finally, short-term rentals from your home. That's that Airbnb and VRBO. However, comes in with the risk, especially now, thanks to the pandemic. A lot of people that have been doing short-term rental stuff have found themselves owning all these properties without anybody paying for it, losing dearly on it, and we're going to be seeing some foreclosures coming from that because, as we just saw through TomTom, people are not traveling, people are not going anywhere. They don't want to stay in anybody's home or bed or any of that stuff. And so, I don't know that that's the best way to go this time around, but, to each their own. Okay. Now, here is the top 10 uh, MSAs with greatest numbers of refis in the first quarter of 2020. And these are major markets that we have in the United States. And we're going to use Atom data to get this stuff. So, refinance loans accounted for 55.7% of all home loans in first quarter of 2020. The number was down 16% from the fourth quarter in 2019, but up 87% in first quarter of 2019. And just so that everybody's on the same page, first quarter of 2020 is, well, first quarter of any year is January, February, and March. It is going to be interesting to see what happens in second quarter, which is April, May, and June. It's going to take a little while to get there because we're still in month of May and we still have a month of June to cover. But I think that these numbers are going to go up potentially. We'll see. We'll see. The report also noted that residential refinance mortgage origination increased year over year in 96.9% of metro areas. Among those were Chicago, LA, Dallas Fort Worth, New York City, and Houston, Texas. Okay, so obviously Chicago and LA have been like through the roof, whereas I mean, even 71% for New York is quite a bit. Also posting high levels of year-over-year increase in the first quarter of 2020 include Seattle, Tacoma, Bellevue, Washington, uh, 171%, y'all. Washington, Arlington, Alexandria, DC, Denver, Colorado, Phoenix, Arizona, Riverside, California, and Atlanta. So you can see kind of what's going on. We can actually click on this stuff and you can really see what's going on. So you can see where it was first quarter. So this light yellow, light kind of salmony color is 2019, and then this dark salmon color is 2020, and you can see that it's very high. Obviously, LA is beating everybody, but you can see what's going on in the markets, right? So here we go. All right, let's go back. Let's see if it's going to let me go back. Okay, it did let me go back, but it took all of my little highlights. So there we go. Lesson learned for me and you in case you end up doing these things. Uh, so, residential property mortgage origination analysis also reported that, counter to the national trend, the number of refinance loans decreased year over year in just 6 of 192 metro areas. Where the refi decrease is McAllen, Texas, Beaumont, Texas, Syracuse, New York, Amarillo, Texas, and Youngstown, Ohio. All right, so apparently Texas not necessarily quite, changing or refinancing. In terms of purchase mortgages, including to the according to the report, lenders originated a little bit over 500,000 residential purchase mortgages in first quarter of 2020. That number was down 12% from fourth quarter of 2019, but up 13% from first quarter in 2019. The analysis also noted that a total of 244,000 plus home equity lines of credit were originated on residential properties in first quarter 2020, which is down 20% from basically end of 2019 and down 11% from 2019. So what we're basically seeing is that there was quite a bit of movement within the purchase of the first quarter. Again, I'm excited to see the second quarter of what's going on. I think we're going to see a little bit of a dip, but also that depends on what happens now in month of June. We've seen reports that in May, sellers were actually able to sell their properties very fast for much higher price than asking. People were actually bidding it up because in some of the markets there was such a high demand and low supply that prices were frankly going up. But we are not done. I promise that we're going to study of what's going on with real estate, because my belief is that right now where we are, we're going to be experiencing some amazing deals that are going to be coming our way. And again, a lot of that is going to come in foreclosure, and we're going to cover that just right now. And a lot of that is going to come in the form of auctions, particularly tax auctions. And again, if you don't know how to get into the tax auctions and how to do that stuff and how to potentially flip these properties, please do check out onedealaway.com. And you're going to want to go into um, sorry, my brain just stopped, into the academy, where for super low monthly payment, you get all kinds of cool courses, including how to get into the real estate market and how to do that stuff. So, anyways, let us continue. Coronavirus impact on the foreclosure market. So, analysts predict a responsive rise in the number of foreclosures over the next several months. Real estate investors, it's wise to make sure you keep a close watch over changing trends in the distressed market, and you can do that live here at onedealaway.com/live, where we go live every morning. So you want to do that, absolutely want to do that. And if you end up watching this on YouTube, make sure you subscribe to that channel, so at least if you're not able to show up live, because I understand people are from all over the world, and 7 a.m. Eastern time, or as I like to call it, New York time, for my international watchers and viewers, at least you can watch a replay on YouTube and still be able to benefit from the news. 156 plus thousand US properties with foreclosure filings in the first quarter of 2020, which is a 3% decrease from the first quarter. So basically from the last year, same time. 46,800 properties were recorded with foreclosure filings in March 2020, which is down 20% from March 2019. And right over here, you can actually see the sort of chart of kind of what's been going on with the foreclosures. So you will see it starts, I want to say, with April, and it basically goes into the March. So you will see that we haven't seen much of anything, but I do believe that this is going to shift and change. Many may struggle to keep up with mortgage payments in the future thanks to loss of jobs and everything else. I mean, we have 40 million people that have lost their jobs, and I'm going to argue that some of them have homes. And I know that there's these forbearances and that kind of stuff, but all of that stuff is set to expire at some point in the near future. And when that happens, if the government doesn't act quickly, which I don't think that they will, because they kind of act fast, sort of, and then they act super slow. And that's what we're seeing right now. Our year-end 2018 U.S. foreclosure market highlighted that foreclosure filings were 78% from the 2.9 million highs of 2010. Now, of course, this is a little bit delayed data because 2018 doesn't necessarily help us out, but you can see that there are changes definitely happening, and as we are entering the new wave, more foreclosures will be coming our way. Industry analysts predict that after an extensive period of contraction, the number of foreclosures is predicted to grow rapidly next year. The number of foreclosures could also see a sharp rise over the coming months due to greater unemployment rates and financial difficulties due to COVID 19. Unemployment applications have risen drastically, as you know, and foreclosures may, in fact, be one of the smartest residential real estate investment to consider in current circumstances because newly foreclosed properties often require minimum renovation work, offering a higher return on investor to you as to, return on investment to you as investor. So excuse me, this is one of those things that I keep saying that I really, really, really like getting into the discounted deals. I call these discounted properties because you can get them for pennies on the dollar. So if the market price is 200,000, you might be able to get it for 180, 150, 150,000, sometimes even 20,000 or less. So to me, it's almost like silly to go in and pay a full price when you can get something that is equally as amazing that you can get for fraction of the price. And so, to me, if you're not afraid to take a little bit of a risk, go in, invest in stuff. Everything around real estate is fixable. Some things, of course, cost a little bit less. Some things cost a little bit more. But let's take like a worst case scenario is, let's not go there. But let's take a really bad case scenario. If you do proper research, which we teach at onedealaway.com, but if you do proper research and you find that, what, this is not a swamp or a dump, it's a property. Yeah, it might need some work, and you go in and say you buy something that is $200,000, but you buy it for $20,000. Well, you have to fix the roof, and maybe you have to put in the new heating or cooling system, and maybe you have to fix in the kitchen and the bathroom, and all that together, say that ends up costing you $50,000, for example, right? So you put that in. Now you spend $70,000, but you have a property that is valued at 200 plus thousand dollars. You can refi, you can rent out, and you'll end up more likely than not, if the math is correct, running at ridiculously good return on investment and cash positive, which is absolutely amazing. Then you can just rinse and repeat. And that is exactly what we teach at onedealaway.com. And those are the things that have saved my bacon, that have gotten me from being completely broke when I lost all of my money in the stock market in 2008 because I didn't know what the heck I was doing. And I was relying on a third party to guide me, to teach me, to do everything for me. Well, you know what? I got burned. And when you get burned, seriously burned, you learn your lessons, you start learning, you participate in things just like this, you start taking action for yourself to protect yourself. All right, time to switch into one of my other favorite assets, and that is cryptos. So, what's going on in the world of cryptos? Boy, like I told you, we have a super juicy episode, and I'm beyond excited that you are here. China to launch digital yuan next year to replace cash. Now, we already talked about yesterday how there's all these different countries that are talking about, building their own cryptocurrencies, and they were talking about 2 to 3 decades. And I was asking, like, why? Why? It doesn't take that long to build this stuff, especially if you have people who know what they're doing. And there's a lot of programmers, not as many as like to be able to build you a website on Kajabi, which I think anybody can do, but I'm talking about, building some of the programming stuff. So, uh, People's Bank of China has revealed plans to have its sovereign digital currency ready in time for 2022 Winter Olympics. Trials are already underway in Shenzhen. Uh, I am going to butcher these names, and so my apologies to people of China and people who understand how to pronounce these things. So I'm going to do my best. Shenzhen, Suzhou, Chengdu, Zoyan, new area in the northern province of Hebei, said the central bank governor Yi Gang. If the government is satisfied with the results of this year's test, the currency will be issued next year. So 2021, 2022 is when we can expect that yuan is going full blown digital. Digital. And you have it over here. It will displace the US dollar. And that's exactly where they're going. You know what I mean? Because we already talked about U.S. dollar has United States has been weaponizing dollar for decades now, and governments around the world are becoming sick and tired of that stuff, and so we are seeing sort of governments wanting to become sovereign, meaning they want their gold back. They want to have their own independent currencies, independent of everybody, that no government can shut down, no SWIFT can stop, no, none of that stuff. And that's where crypto comes in. It's amazing and beautiful. Digital yuan will be linked to the holder's smartphone number with transactions taking place through an app. User will be able to transfer money between accounts by tapping phones, much like having physical cash change hands. The currency will be legal tender, so it could be exchanged without needing a bank as an intermediary. Now, one of the things that is kind of interesting that when we go this route, banking will change forever. A lot of banks will disappear completely, and what we might see is banks will need to become educational companies teaching people how to use digital currency and how to use the new apps and stuff. But you know what? There's all kinds of channels on YouTube and courses. And we, of course, are offering a live course absolutely free, a Crypto 101. So if you want to learn how to get into crypto, how it all works, and just pure basics. We're not going to talk programming or any of the crazy stuff. There's plenty of amazing companies that are doing that stuff and teaching you how to do that. But if you're interested in learning how to use crypto and why it's so important, join me at onedealaway.com/live /crypto 101. We've already covered that, and I'm actually going to put it in the chat, in the notes, the link, so that you can actually go in. You just need to register, and it's absolutely free. We're going to be teaching it live. That means you get to interact, ask all of your questions. So what I'm saying is that banks are going away, y'all. Banks are going away. There's no ifs and buts about it, and we will see the central banks becoming the people's banks, not the bankers' banks. And the entire industry of banking is going to change and shift. And it's going to be a very interesting and probably potentially a volatile time period that we're entering, but very, very exciting. And so if you're not getting ahead of it, you're going to be behind it, which is why it's so important to be here and learn. All right. So a phone number alone would permit only small transactions, while providing proof of identity or a photo of a debit card would raise the limit. It has become easier and to use and popularize new payment technologies since growing coronavirus concerns make consumers prefer digital currencies to physical cash. And not only that, there's many places like we talked about yesterday, they don't want cash, they don't accept cash, they're not interested in that stuff. And China has been very digital anyways, where they've been using smartphone devices where they just basically scan a code, tap the thing, and they go. Now they're actually going to be using more of that crypto and blockchain stuff in order to do the transactions. Now moving on, Facebook has been very busy, very, very busy. They're acquiring, they're building, they're doing that stuff. So they're rebranding their Calibra, the wallet subsidiary piece, and they're basically announcing that they're rebranding it from Calibra to Novi. Novi will act as a digital wallet for Libra digital currencies, unlike Libra, which is being developed by an association which includes Uber, Lyft, Spotify, amongst others. And there were some other places like Visa, but Visa exited, and Visa has filed its own patent. So just saying, like I said, if you don't believe that crypto is going to explode in the upcoming years, I don't know what you're watching. I don't know under what rock you live in. I definitely live under a rock, and people always make fun of me, but I also understand what's going on in the marketplace and where we're heading. And I am positioning myself and my companies to benefit from the upcoming booms in these technologies. And I hope that you will do the same for yourself as well as potentially even your companies, you know. The digital wallet will be accessible both as separate app and integrated with Facebook Messenger and WhatsApp. The Liberal Association in April announced that it was revamping the project. Instead of single US dollar backed cryptocurrency, the association said it will launch multiple digital currencies pegged to different fiat currencies like the dollar, euro, British pound, and a separate Libra coin. So basically, they're developing a stable coins. I don't know how they're going to be different from things like DAI and Tether and that kind of stuff. So it will definitely be interesting to see. But you know, there's a lot of scrutiny around it, and so, anyways, just an interesting thing to watch and see. We'll see what that looks like. I don't see this being anything super crazy, but again, we could be proven right or wrong. Only time will tell, as I like to say. Now, here's an interesting thing. Again, another proof why you should get into learning how to get into cryptocurrencies right now and learn for free. Learn absolutely 100% free, offering it only on onedealaway.com. And if you go over to the products, you know, if you can't remember it, go over to the products, just look for Crypto 101, register, and we're going live actually what day is today? My gosh. Oh my gosh, it's Thursday. We go live today. We go live today with this stuff. So super excited. So you want to definitely do this right now because in a few hours, we're going to be going live teaching people how to invest in this most exciting asset ever, ever. And if you join the academy, part of what, aside from learning about real estate and management and stuff, you're also going to be learning how to do the crypto stuff. So if you missed this and you missed the live thing tonight, then you can join the academy and the course is going to be available there. Okay, in 2020, pro-life, pro-guns, pro-Trump, conservative, Republican in Congress could be now designated as pro-crypto and pro-blockchain. What? What is going on? So last week, Guthrie, who I guess is a conservative, hold on. Um, yeah, Brett Guthrie is a Republican from Kentucky. Was the only sponsor of a bill he introduced called Advancing Blockchain Act, part of a group of Republican bills. And he's basically saying that the Advancing Blockchain Act will promote the use of blockchain technology in our economy. Blockchain technology can be used for cryptocurrency, but it also has many other potential applications. And the Advancing Blockchain Act will allow us to explore these uses to improve our technology. Then we have Republican leader Greg Walden of Oregon. And he's basically saying emerging technologies will define America's future. We must lead to develop and adopt these technologies. It's sort of like back in the 60s when we were racing with Russia of who's going to get into the space first, right? And how is it going to do better. It looks like now we're going to be racing against China, which China has already given a date, y'all. So we got to hurry up. Uh, but that's kind of where I see this going. But there's some, folks that have been in the crypto space, and crypto space, for a long while has been sort of a place for the rebels, so to speak, who wanted something a little bit different. Uh, and become sovereign individuals. They have been part of this stuff. They have been the early adopters. And so here we go. One of the folks that belongs in that group had to say a sort of response to this stuff. And it says, most people in crypto are libertarian. Me personally, I like minimal government interaction and believe that people should dictate and govern things to an extent. I do not necessarily think that having support from the conservative Republican side is a negative. At this point, any support to help with guidance is welcome. As for real adoption to take place, we need to work alongside the government. So there you go. It's one of those things that I agree with her. I think we all need to work on this together. I don't know that I'm super crazy about the central government issued cryptocurrency because of the potential of what it could do. But it's where we're going. You like it, don't like it, love it, hate it. This is the direction that we are going in, and it's not going away. It's not going away, y'all. It's only going to grow. While it is still not clear as to the intent behind exploring blockchain in the context of interstate commerce, it is hard to find fault with the enthusiasm of Guthrie for blockchain. So there you go. This is the part, and they actually have issued the entire Federal Reserve Bank of Dallas has issued a market reaction to regulatory news. You get to read this whole 18-page document. So if you're interested about this, you can find stuff on Forbes, and you definitely want to read this stuff. Now, Coinbase. If you know anything about Coinbase, Coinbase is basically an app where folks have been able to, relatively speaking, easily buy, sell, trade their cryptocurrencies. Now, Coinbase is sort of how do I put it? Controversial in the space of crypto. While it makes it easy for new users and adopters to get into it, it also charges ridiculous fees. It's very, very expensive. And they are, you know, if the Bitcoin is at 9,000, the ability for you to buy it, not only if are you going to pay a fee according to the amount of money that you're going to spend, like US dollars that you're going to spend to buy it, but they're also going to charge you a much higher price. So if the going price for Bitcoin is 9,000, they're going to charge you like 9,100. And on top of that, if you put in $100, they're also going to take like $3 fee on top of it. That's really, really, really expensive. So, not necessarily crazy about that. I hope that they will actually end up changing that stuff. And if you don't want to pay super high fees and you want to learn different ways that you can get into crypto without paying these high fees, we'll be covering some of those ways in Crypto 101 course that, as again, is starting tonight. Coinbase buys crypto trading firm Tagomi to boost institutional trading business. Coinbase, the largest cryptocurrency company in the US, is acquiring the 2-year-old 20-person digital asset trading firm Tagomi for a price between 75 and 100 million. I think they're getting a super cheap deal, but that's just me. Tagomi caters to deep-pocketed crypto traders who make transactions between a quarter of a million and $2 million. Tagomi has attracted high-profile backers and clients, including Peter Thiel, as well as firms like Paradigm, Polychain, Pantera, and Multicoin. It was valued at $72 million when it raised last funding in early 2019. Coinbase is acquiring Tagomi for its technology and talent. As of October 2019, the startup was facilitating 17 million in crypto trades on average week with estimated monthly revenue of $75,000. And they will help Coinbase accelerate Coinbase Prime, a trading platform for institutional investors that was announced a few years ago. Coinbase balance sheet, which includes 8 billion in Bitcoin and other cryptocurrencies stored through its retail exchange and institutional custody business, will help Tagomi with to serve large customers and expand its services, including letting customers borrow cash, borrow crypto assets, and sell assets short, basically betting to go down. There's other things that also do that stuff, but again, to each their own. More the merrier, and not all of them will survive. As any emerging thing, things go really big, then they kind of shrink, streamline, and they go. And this is why it's super exciting time to go in and join now, because you have an opportunity to play within this very new market where just about anybody can have some sort of project and learn while things are super low and barrier to entry is ridiculously low. Coinbase balance sheet will also help Tagomi with liquidity challenges. And the purchase follows other key acquisitions by Coinbase over the last 2 years. For example, it bought the company Zappo for 55 million, earned company that lets people make money for giving advice, and so on. And part of it, of why they were buying, is to get more customers, to get more technology, and to acquire talent, which sometimes works, sometimes doesn't, because after a while, if you don't put it properly in the contract, people end up leaving. Yeah, yeah, it happens. All right. Now, you might have heard that the Bitcoin transaction fees have been going up. However, we are seeing now that the transaction fees are declining as network congestion eases. So, this is part of the intro piece into Crypto 101. So, let's take a look. We've had a lot of transactions that were sort of congested, then the things have adjusted, and now the fallback in transaction fees are related to normalized transaction activity and recent mining difficulty adjustment, which occurs every 2 weeks, plus minus. Bitcoin block size is 1 megabyte, which means miners can process only 1 megabyte worth of transaction per block, which is roughly mined every 10 minutes. If the number of transactions exceed 1 megabyte, then the network gets congested and miners prioritize transaction with higher fees. Duh, which is why if you want to process your transaction, you got to pay more in fees. However, network congestion has been on a declining trend since stopping in May. So that's kind of lovely. And now the block interval time is dropping as well, which is really, really good. That means that the recent decline in fees could also be associated with the downward adjustment in the mining difficulty and the resulting drop in block interval time. So we've gone from, it's supposed to be roughly an average 10 minutes. So it could be 14 minutes for one, 8 minutes for the other one, 2 minutes for the other one, 17 minutes for the other one, but on average, it needs to be 10 minutes. So the 7 day rolling averages of Bitcoin hash rate fell from 120 extra hashes per second to 90. So you can kind of see that over here as well. And again, if you want to read more about this stuff, go to coindesk.com and you'll be able to read more about it. While the 7 day average of hash rate is still hovering around 90, the mean block interval fell from 11 minutes from the high of 14.3 in May 17th. So there you go. That's kind of what's going on in the world of crypto, in the world of real estate, in the world of economy as a whole. I hope you have enjoyed this. This is basically the end of this one. Hopefully you will join me live tomorrow at onedealaway.com/live. Go ahead and register for that crypto course if you're interested. And of course, the academies, of course, exist there. So if you want to do that and learn how to do these amazing real estate deals that are coming our way, Academy is probably the best way to do it. Of course, there's other products. If you're just interested in one particular thing, you can only do that as well. But I think you will find Academy to be sort of a no-brainer to join. Thanks for watching. Make sure you give me some thumbs up, subscribe to the channel. Let's chat, let's connect. If you got questions, live is the best way to come and catch me. Until next time, stay forever money blessed. And do remember, you are only one deal away. Bye, y'all.